And now that small businesses have big data problems, we need to start adopting the proven ways of managing big data that lead to good outcomes. And this is one of them. Welcome to the Agency Profit Podcast, a show dedicated to going deep space on agency operations, which is just as nerdy as it sounds. I'm your host, Marcel Petitpas. I'm the CEO of Parakeeto, a firm that helps digital and creative agencies measure and improve their profitability. Join me as I interview some of the smartest thought leaders and agency owners in our space and go deep into operations, metrics, and all the other things you need to get right so you can spend less time worrying about operations and more time executing on your vision. Hello and welcome back to the Agency Profit Podcast. It's Marcel here, and today it's just going to be me and you and some really important ideas on how to think about designing data systems inside of your agency. And these first principles, honestly, are going to apply to just about any business that's trying to get more out of their data and trying to empower themselves and their teams with data to make better decisions, create more alignment, have more certainty, have more clarity, all the things that we're trying to get out of our data, and answer the core and fundamental reasons that people, in our experience, struggle to get those outcomes. And it's based on 6 years of focusing on this problem exclusively as a company and working with hundreds of agencies to solve these problems. And in many cases, actually running the system alongside our clients for years at a time. So it's not like at Parakeeto, we just implement the system and then leave people to do it on their own. We actually have the opportunity to be accountable to that information and data being clean and useful and being used to make decisions on an ongoing basis. And we're involved in that entire process. So I want to share what I've learned from that, because a lot of these things are going to be challenging fundamental beliefs that are holding so many people back from being successful, despite the fact that they're throwing often a lot of time, energy, and resources at trying to close this gap. So let's start by describing the problem that you might be experiencing or that you might have seen people experience around this, which is that often, especially today, data is really easy to produce and inexpensive to produce. In fact, what we know to be true is that small agencies and small businesses in general have more software tools than they've ever had within their firm. And we do see this pendulum that's constantly kind of swinging, in some cases swinging within an organization, of using a bunch of individual tools that are best of breed. So for example, you have a time tracking tool that just does time tracking. You have a project management tool that's really good at project management. You have a finance tool that's really good at finance. And then in some cases, you might swing that pendulum towards, oh, let's do an all-in-one tool where all of those things are under one roof. And often that pendulum will start to swing back the other way. And so that's one of the ways in which we see people trying to solve this is they think it's tools problem. So they are constantly changing tools, trying the next tool, and spending a lot of time, money, energy. And their team is often having to deal with a lot of unnecessary change management, because the problem is framed as a tools problem, and often it's not actually a tools problem. So we're in this world where agencies now have access to more data at a lower cost than they've ever had before, and yet we're still struggling to get value out of that data. The other thing that we know to be true is that a lot of the frameworks that have been written about and architected into especially professional services automation software over the last couple of decades were mostly predicated on the assumption that everything was going to function in terms of time and materials. So you work an hour, you bill for that hour, and that is how the business works. But what we know to be true is, especially over the last decade, most small agencies have not necessarily eliminated time and materials billing. A lot of people still do it, but it's often not the only billing model. And it's very rarely the primary billing model in a lot of firms in our experience. The vast majority of firms that we work with either do very little or no time materials billing, but at the very least, it's not their primary billing model. And so this is reflected in why so many of them, in our experience, try to adopt these accounting methodologies, reporting methodologies, ways of calculating certain metrics, and tools that are built on the assumption that like that is how the business works. And they start to feel like the vast majority of the work that we do is an edge case in this concept. The flat rate, productized, retainer that's not based on hours, but based on deliverables. These things don't really jive with the way that the system works. And we end up doing all of this edge case management. And at a fundamental level, this framework that used to work when everybody in the agency world just kind of billed for time just doesn't feel compatible with the current reality. So all of these things are leading to this vacuum where so many people are feeling like, we have all of this data. We are producing it every day. across all of these different tools. And yet we still feel unclear, uncertain about what to do with that information, what it means, what it's telling us. And we are really not getting the results, the value from all of that data. And in some cases, that is the feeling, despite spending a lot of time building spreadsheets, changing what kind of numbers and KPIs you're tracking, changing the way you're having meetings around this stuff, trying like hell to get better at capturing the information, cleaning it, transforming it, moving it around, switching tools, firing project managers and CFOs, and it just still isn't coming together. So the question is, what is the problem? And I want to articulate today the fundamental framework and some of the core principles that I believe need to be in place for this to be successful. And again, based on my work successfully implementing these systems with agencies for the last 6 years. And I think this is going to be really interesting because it's going to challenge a lot of the ways of thinking that seem logical and in theory seem like they make sense, but in practice hold so many people back from being successful here. So there's these kind of really interesting mental models that I think will hopefully challenge some of you to think differently and unlock some of the reasons why maybe you've been getting the results that you've been getting trying to solve these problems. So with all of that in mind, let's dive into the first framework. And if you're listening to this, just know that there is a YouTube version of this. And in that YouTube version, there will be some visual aids, but I'll do my best to describe these things as I go through. Do you want some free resources to help you measure and improve your profitability? If you do, then I want to tell you about our agency profitability toolkit, which you can grab absolutely free in the show notes or by heading to parakeeto.com/toolkit. It's packed with training videos, cheat sheets, templates, and all kinds of other great resources to help you start measuring and improving the essential metrics that are going to drive better profitability in your business. And it's helped thousands of other agencies around the world do the same. So I want to encourage you to go and grab a copy of that. And if you'd rather get in the fast lane and just have our team of experts guide you through the process of measuring and improving your profitability, then I want to encourage you to apply for a consultation at parakeeto.com. And with that, I want to thank you again for tuning in. I hope you enjoy the episode, and I'll let you get back to it. So the first thing that I want to articulate here is a Venn diagram that describes the three things that need to be true for the data operation inside of your agency to be functioning at a high level. So we have three circles and they intersect in the middle. And in the first circle, I'm going to write the first thing that you need to have, which is data. And there are 4 data sets that you need to have. They're pretty simple. You need to understand finance data, number 1. Next, you need to understand people, you need to understand projects, and you need to understand time. All right. So without going into much detail, there's some basic information about these 4 critical pillars of the business that you need to be able to produce. And the good news is this is a super solved problem. It's not expensive. It's not complicated. It's not that cumbersome. With the tools and the features within those tools that we have today, it is easier and cheaper than ever to create raw financial information, to create information about people and how much they get paid and how many hours they work and what their capacity is, projects, how much you're getting paid, how much time you expect it to take, the timeline you expect that to take place on. Like, none of these things are difficult. And even time, there's so many time tracking tools out there. It's really not hard to produce time data. The problem is producing raw data is not enough. If raw data was the answer, then we would be plugging that into dashboards and AI tools and asking questions and getting answers. But that's not happening, right? So why is that not happening? And it's because the hard part is actually everything that happens after that to help convert that data into insight. And the second piece of the puzzle here, and what I'm writing in the second circle, is we need a framework. And this one's a little bit nuanced, but once you hear it, it'll probably resonate quite a bit, right? So it's one thing to have data. It's another to have a framework for what that data is meant to measure. And that is about understanding what are the metrics, number 1, that we are going to actually be tracking. What are those metrics? When there's a million metrics we could be tracking, which ones should we actually be paying attention to? And ideally, this is the smallest number of metrics possible that give us the highest amount of information about the business. The second is, what are the formulas for those metrics? Because it's one thing to say, for example, we're going to measure utilization, but it's another to be very clear about, okay, utilization has 2 objects within it. The first is capacity. The second is delivery hour. For some people would think about that as a billable hour. So then the question becomes, okay, well, what exactly is someone's capacity? Does it contain time off? Does it not? What about holidays? What about sick time? What about internal time? What about the company offsite or the foosball tournament we host every third Friday at the office, right? So what exactly is someone's capacity? And on the flip side of that, what is a billable hour? Is it time that was billed to the client? Is it time that was spent doing the client work? What about working on the company website or doing social posts or updating ClickUp for 50 clients at once, but we're not really tracking it to one individual client? The answer to every single one of those questions influences what this formula will output in terms of a percentage. And it therefore influences the last key piece, which is the relationships between these metrics. And this is a thing that, if you've ever experienced this, is pretty frustrating, where you make a change to your definition of a formula. And all of a sudden, what you realize is, I now have to reevaluate every other metric that we track, because the relationship between this metric and all these other metrics is now different, because we have changed the formula, we've changed the definitions. And that's important because in order for the framework to really be useful, in order for us to actually be able to make decisions and get insight and have alignment and understanding, we need to understand what the relationship is between the metrics we track and the way that we track them and all the other metrics. And more importantly, the business itself. So if our utilization rate goes up or it goes down, what does that mean? What is the reason that it would go up or the reason that it would go down? How is that going to influence the other metrics that we care about, like our delivery margin, for example, or our EBITDA, or our agency gross income capacity? And unless those things are very clearly defined, there's going to be fuzziness in that. And if there's fuzziness in that, it is going to dramatically erode the effectiveness of these metrics for driving the outcomes that we want, which are, again, decisions, confidence, clarity, alignment, etc. And if you've ever tried to work through this exercise, you'll know that it's very nuanced. I could tell you that it took us almost 3 years to really get a grip on this. And we had to test this against like dozens and dozens of agencies to work out all of the kinks. And so I'm not trying to be cynical, but the likelihood that somebody inside of an agency can figure this out in isolation with just that one business without actually being exposed to the multitude of edge cases that we had the benefit of being exposed to, it's very low. Or here's the other thing that becomes problematic. You might land on a framework that actually is functional for the agency in this moment in time. The problem is the business model is often not static. And so as the business changes over time, maybe you start selling things that are a different billing model than you've ever sold before, or maybe you start employing a style of labor that is different than you've handled before. All of a sudden, the framework gets challenged and there's maybe some fundamental changes that you need to make. And so this becomes fragile against the reality, which is that there's going to be change. And that leads us to the last piece of the framework. So the first piece was data, right? There's 4 sets of data that we need: finance data, people data, project data, time data. Most agencies have that figured out. They're producing all of this data. The second piece is we have to have a framework that data then is supposed to flow into. And we have a solid understanding of the metrics, the formulas, and the relationships between those metrics and formulas, and the relationship between those metrics and our business, the impact that it has on our business. The last critical piece is the process. Nobody wants to talk about this, but it's so important. There is this pipe dream, and I hear it all the time, of people saying, I just want to automate this. I just want to set up a Zap or some kind of dashboard that connects directly to my time tracking and project management and finance tools and sucks in all the data and in real time reports on all these metrics. The problem is that isn't possible. At least it's not possible today, and I don't think it's going to be possible for a very long time. Yes, even with AI, and I'll explain to you why. The first critical assumption, and this is what kind of invalidates the thesis of a professional services automation tool at a fundamental level. I love PSAs for workflow, but the fallacy that they're going to automate reporting, I think is so disconnected from reality. And the main reason for that is, first and foremost, data hygiene. The idea that we're going to collect data about projects and people and finance and all this stuff and put it straight into a dashboard hinges on the assumption that that data is going to be clean. The inputs are going to be clean. And the problem with that thesis is it's never been true in my experience. Looking at hundreds of agencies, I've never seen it once. Not once. The other thing that's also true is that it assumes that the data is not going to change. So even if by some miracle you could be so militant about the inputs that there was never any mistakes in the inputs, and you also had good compliance. Because that's the thing, is you can try to get to perfect inputs, but it's often going to come at the cost of compliance. So then you have an incomplete data set, so you're not getting accuracy either way. But let's assume that you figured out a way to have perfect hygiene at the input. The second thing that is going to happen is that you would never change anything about the data structure. So you have change management, right? So let's talk about what is the example of a change? Well, you decide to rename your customer success team to client success. You decide to change the way that you structure projects inside of your project management tool. You decide to change the naming convention for a task list, or for the way a project goes in there, or how you're going to develop project codes. You're going to change tools. You're going to switch from this project management tool to this other project management tool. You're going to switch from a cash-based to accrual-based accounting. There's dozens and dozens of examples of change that I could articulate. New products, new services, new team structures. There are always going to be things changing within the business that are going to influence the data that is flowing through these systems and into the framework. And again, if these systems are architected in such a way that they assume that there will be no change, and they break every time there's change, or the reports are not accurate every time that there's a hygiene issue, we are setting ourselves up for failure, and we are building a system that is not congruent with reality. And unfortunately, when we don't use a proper data management framework, that is what ends up happening. We're constantly fighting against hygiene and change management issues. And I'm here to tell you that the solution is not to try and stop those things from happening. It's to build a system that assumes they will happen, because in my experience, they will, no matter how hard we try to stop them from happening. And in fact, we want those things to happen a lot of the time. We don't want to be constrained and unable to change things, because change is a healthy thing to be able to do without too much consequence. So it's about limiting the consequence. So to recap, under process, we have number one, hygiene. We need to have a process for maintaining the hygiene of the data. And this is not about trying to control inputs. This is about actually having a step to pull the data out of the source system and then analyze it for mistakes, for incongruencies, for naming convention errors, for mismatches, to be able to do stitching between different data sets. For example, we used to use this time tracking tool. Now we use this other time tracking tool. Okay, great. Let's stitch those two sets of data together and normalize them, transform things, build tables of data, build groupings of data, like all of those kinds of things. We need to have a step in the process that allows us to do that, because without doing that, we're not going to have clean data, and therefore our reports won't be trustworthy. And we also want to be able to handle change over time. The third piece that we need to have is cadences. There are going to be cadences, just like financial data, that you have cadences for bookkeeping and getting invoices in and doing reconciliation and matching things up and making sure that the numbers that you're looking at are compound and accurate. The same thing is true for this. There are many metrics that people want to track in a real-time way that just can't be tracked in a real-time way. Let's think about utilization, for example. You can't track utilization in real time unless people in your business track their time in real time. And again, I've never seen that happen. So utilization is a metric that probably needs to be measured on a cadence, let's say weekly. And so we have to think through, okay, what needs to be true for us to accurately measure our utilization on a weekly basis? Well, we need to have a complete set of capacity modeled for that time period, and we need a complete set of time tracking data for that period. So let's just look at the time tracking side of that equation. What that probably means is we need some kind of a deadline for when everybody's time is entered. So let's say that's Friday afternoon, we get everybody's time in. Then we probably need a step where we go and check to see if we have a complete set of data. And we notice on Monday, for example, 3 people have not submitted their time. So then on Monday, we need to go and check with them to get them to enter their time. And then on Tuesday, we probably do some quality assurance to make sure that there isn't a 150-hour time entry because someone forgot their timer was running over the weekend, or there isn't a designer that logged time to engineering because they accidentally picked the wrong category to put that time in. So we need to go through a process to get a full set of data to make sure that it's clean and accurate, and then we can report on utilization. Because if we tried to report on utilization in real time, we would have a ongoing measure of utilization, but it would never be accurate because we would never be taking the time to stop and build a complete set of data for a time period. So we have to be considerate of cadences. What are the meeting cadences, the decision-making cadences that we're actually building this reporting for? And then what are the cadences that need to be true for us to have complete and accurate data across the metrics that we're tracking? These things need to be considered. My experience is that most agencies are lacking a framework The good news is the framework is free. We've published it. It's in our free tools. You can go download the toolkit and get access to the framework. But the other big piece that's missing is the process. And I think the biggest issue with the process is people don't acknowledge that this is necessary. They don't want to believe that someone's job has to be doing these things. And it's not an easy job. This is not something that your junior project manager is going to be able to do off the side of their desk. In fact, it's probably not something that your CFO or your operations manager is going to be capable of doing off the side of their desk, because it's nuanced and it's a lot of work. And in enterprise organizations, there are entire teams of people, millions of dollars of payroll per year that go towards this job. It's called data operations. There are data scientists and data engineers and project managers using enterprise software. And all they do is run this process. And in particular, they run a framework called ETL. It stands for extract, transform, and load. Extract, transform, and load. And the transform part is the missing piece in the infrastructure for the agency industry. Almost every tool, almost every workflow that I've seen clients try to build themselves, it ignores the transform part. It assumes that we can simply extract data from the source and load it straight into a report. And that is where most of the issues lie. And I'm here to tell you that unfortunately, you need a middle part where you transform the data. And that middle part probably needs human intervention for the foreseeable future. It will probably be assisted by AI, and there'd be a lot of leverage in that. But we're working on this. I don't see a path to a human being being able to be replaced completely, because there are certain things that AI just can't discern that is going to require real context from inside the business. And so this is what we do as a service at Parakeeto. It's the reason that we do it this way, because this is what has been working for enterprise companies for a couple of decades. And now that small businesses have big data problems, we need to start adopting the proven ways of managing big data that lead to good outcomes. And this is one of them. So at the highest level, this is the core framework. What needs to be true for you to have a functioning data system in the business? It's more than just data. You have to have a framework, and that framework should be very deliberately designed. And then there should be a process around that system to account for the reality of data hygiene issues, change management over time, and making sure that that change does not get rid of historical data, break the entire reporting system, change the way that metrics are being calculated, create horizontal inconsistencies so that we can no longer compare the metrics we look at today to the metrics we looked at before, and has cadences so that we are getting the right data at the right time for the right conversations, but also so that when we look at that data, it is complete in terms of the inputs that are being measured. So this is kind of the fundamental overarching framework for how to think about building a data system, in particular for executive level visibility inside of a professional services firm. Again, we need to have data, and in particular, finance people, project and time data. We need to have a framework that articulates clearly what metrics we track, the formulas we use to track those, and the relationships that those metrics have with each other and with our business. And we need to understand the process by which we maintain data hygiene over time. We handle change management, and we establish cadences around when we measure things and when the data comes together in complete sets to measure those things. And in particular, we want to have a process that allows these things to happen, as opposed to trying to fight those things and prevent them from happening. So this is the highest level that I think we can be talking about this at, but I think it's important to start here. And in future episodes, we're going to dig into more of the details in all of these things, but also talk about some more fundamental first principles. But I thought it was important to start here at the highest level and really expand on, in my experience, the two big missing pieces in a lot of firms, which are the framework and the process. These are the things that typically are being ignored. And hopefully just understanding that at a high level will help you see for yourself, if you've been struggling with this, where there might be a gap in your own execution as it relates to connecting the dots between these things. So with all of that, if you have questions about this, I would love to hear from you, because I want to answer those questions. After listening to this, what stands out to you? What resonated? And what's still unclear? Where should we go next? So that on future episodes, I can dig deeper into this, because I'm going to be recording more of these. We've made the commitment. It's in my calendar. It's happening. So this is your chance. Ask questions. Help inform where we take the discussion next, because I'm not trying to hold anything back in these episodes. And by the way, hard sell here if you're listening to this and you realize that you're missing the framework, the process, that you have the data, but despite a lot of effort and time and energy, you have not been able to close this gap. And you find that your team is spending an inordinate amount of time trying to close this gap and it's still not happening. You should reach out to us. It is an absolute no-brainer because this is what we do. And even just the time that your executive team gets back will get you a return on this investment before we even consider the increase in profitability that you will achieve from working with us. So I know I don't do this on the podcast very often, but I'm doing it now. If you listen to this episode and this resonated with you, I want to encourage you to reach out. There's no obligation, but I promise you it'll be worth your time. And if nothing else, we can have a more nuanced discussion and you can walk away with a little bit more insight and ideas on how to close the gaps and accomplish this on your own. And with that, I hope you enjoyed the episode. I want to thank you for tuning in. I will see you on a future episode where we're going to continue to go deep on concepts just like this. See you next time.
Hey, thanks so much for tuning in to today's episode. I hope you enjoyed it. And if you've ever found yourself thinking, man, I get so much value from this podcast, I wish there was something I could do to return the favor. Well, today's your lucky day because you can leave us a review wherever you're listening to this, and it is incredibly helpful. Of course, if you haven't grabbed a free copy of the Agency Profit Toolkit, go and get that. It's got tons of free resources to help you improve your profitability. If you're looking to get in the fast lane and get help from experts to improve your profitability and measure your most important metrics, then apply for a consultation at parakeeto.com. We'd love to chat with you and figure out how we can help. With all of that, thank you so much for being a listener, and we will see you on the next episode.